Legends, today I have a very important video for you. We're going to be discussing the market dynamics, not just for Bitcoin, but for the overall altcoin market and how altcoin season will never be the same. We're going to be discussing the most historic shift in the altcoin market that we have ever seen in this industry. And we'll also be touching on the fact that potentially Bitcoin dominance could move much higher from here. Make sure you watch the entire video because it's jam-packed with very crucial information that you need to be aware of if you're to progress in this bull market. And at the very end, I'll also be sharing the giveaway winner. We'll be doing the draw live on this video. If you enjoyed the content, make sure to smash that like button and subscribe. Let's jump right into the video. Is this a top signal? Here we have Eric Trump now shilling Bitcoin. He has already done this with Ethereum, and now he comes out on his Twitter and says that it feels like a great time to enter Bitcoin. And actually, right before we get into the Bitcoin chart, some breaking news just came out, and that is that Trump Media is to launch the Bitcoin Plus ETF. Now, if you're wondering what that is, basically the news just came out that Trump's company has applied to register trademarks for brand names connected to the launch of its customized ETF and customized separately managed accounts at the beginning of this year. This is insane news because now Trump is getting his hands dirty in the fintech world. As we can see, the investment vehicles will be the component of the new TruthFi brand covering financial services and financial technology. The launch of TruthFi is part of TMTG's financial services and fintech strategy that includes the investment of up to $250 million to be custodied by Charles Schwab, which will partner with TMTG to develop the SMAs. Huge news. Trump is getting his hands dirty with ETFs, but honestly, after being so openly bullish on crypto and even launching his own meme coin, does this kind of news really surprise you at this point? And just another quick news-related thing before we get into the charts. Supposedly, the Trump-Russia-Ukraine peace plan has been leaked. If you're not into this geopolitical stuff, I don't blame you, but all you really need to know here as you're watching the channel is that if there is a solid resolution between Russia and Ukraine, it will likely be very bullish for Bitcoin because the markets don't like uncertainty, as we've been talking about on this channel. If all of these global issues get solved under Trump's reign, it will be very bullish for risk assets such as crypto. And to the Bitcoin chart. What we can see here is something that I've been talking about for quite a few days now, and it's our inability to break above the 100K level. I discussed it on the channel right around here when we saw that 100K wasn't holding as support anymore. We entered a short and made some significant gains right around the 92K level where we exited most of the position. Then we can see that we pumped back up above the 100K level once again to do a little bit of a retest, and we're back down, struggling to actually get solidly into the 99K range. So what I'm looking at here is still personally favoring shorts below 100K. I know that sounds risky, but because of the fact that we were over 100K for several days consecutively, and now it's no longer holding as support, rather resistance, I still think that we could potentially go lower and test around 50% of the wick below the 95K level. Now, if we zoom out completely here, we can see that Bitcoin is actually in a similar range that it was in last year, where last year we were bouncing between a 50 and 70K range for quite some time, and now we're starting to establish our new range between 92K and 106K. So it wouldn't surprise me if we are to consolidate around these levels on the higher time frames, maybe even making a new move to 106K. As we've seen, this has been crazy resistance for Bitcoin. We've had 8 attempts at the 106K level with failing to break it, naturally leading us to much lower prices. But it could be a while until we break out. Tomorrow we do have the unemployment rate coming out, which is going to be very interesting to see how the markets react to that, and that could potentially determine where we're headed next. But one of the more important meetings will be around March 18th, where potentially the Fed will stop quantitative tightening. Now you might be asking, why do I think they would stop quantitative tightening? Well, we saw already what Canada did. They ended quantitative tightening, and now the Bank of England have reduced their interest rates. So there is a slight possibility here that the US could follow suit. But as we know, being the global powerhouse that the US is, this likely doesn't weigh on their decision that much. And just a quick look here at the total crypto market cap, we can see that we're currently oversold on the RSI, potentially suggesting that we could move higher. But actually, since all the way back into right after mid-November, we've been consolidating in this range between $3 trillion and $3.65 trillion. So once again, it wouldn't surprise me here if we are to just bounce around before we make our next big move. Now for the next big move, guys, I can't put it any simpler enough. Bitcoin needs to break above $100,000. As I said, I'm favoring shorts here, and so if we can't break above 100K, it's not going to be looking pretty for Bitcoin. One thing that I need you to remember, and I'm not trying to put out this bearish narrative, but one thing that you do need to remember is that look at this price action by Bitcoin. If we are to break below the wick that we saw on that huge liquidation cascade, I think that unfortunately Bitcoin might be able to revisit lower levels before we make our next leg higher in the bull market. I know you guys have heard me say this, but from the high all the way down to where we had that wick, we dropped just under 17%, 16.5% to be exact. That's not a big dip in the crypto market. We've seen historically that we can dip up to 30 and even sometimes 50%. But just to put it in perspective, a 30% dip would put us all the way down to 75K. That sounds crazy, and I know it would shock a lot of you if that were to happen, especially if it's your first bull market, but honestly, it wouldn't surprise me. If we are to revisit 91K one more time and it doesn't hold as support, there's nothing but air below this region. And so it wouldn't surprise me if Bitcoin makes its way into the 80Ks, although I'm not calling for that now. For now, the main level that I'm really evaluating is the 100K level. If we break above it, then I would be favoring a long towards the 106K region. But now that we're still below it in the short term, I am favoring shorts. And not to be all doom and gloom, but I do need to address Bitcoin dominance. We have seen that we made a new all-time high as we discussed on the channel several weeks ago. Now this cycle is a cycle like none other because Bitcoin dominance just continues to rip higher, breaking everyone's expectations. And one of the reasons we're seeing this is because we're seeing severe underperformance from altcoins. But why are we seeing severe underperformance from altcoins? And I will bring you to this chart. This chart that I'm showing you here coincides with when Pump Fund launched, and it measures against the top 125 altcoins. As we can see, since Pump Fund launched, straight up in terms of Solana's total value locked and straight down in terms of the other altcoins in the market. Why is this the case? So what's been happening is that all of the liquidity is still going towards Solana coins. And if we take a look at what came out from the Coinbase CEO, he essentially said there's 1 million new cryptocurrencies created every week. And that's a fact. All of those cryptocurrencies are created on Pump Fund. We've had more cryptocurrencies than ever in this cycle. And so the liquidity just kind of gets swashed around without anyone seeing any notable gains in their altcoins, specifically if they're high quality, useful altcoins like I've been looking at. So first of all, crypto has become even more of a casino with all of these Pump Fund launches, which is not ideal. Even back in the day, a lot of people would consider crypto a casino, but now that most of the altcoin liquidity is getting spread out across all of these Pump Fund coins in hopes to try to find that 100x, we're not seeing any other altcoins get significant run-ups, and if they do, they tend to get retraced. Most of the medium-term attention has been either on these Pump Fund memes or on Bitcoin through all of the institutional adoption, which is why we're seeing Bitcoin dominance going higher and higher and higher and higher. Now, I've personally contributed to these trenches. I've made a lot of money investing in some of these meme coins, but what I have been noticing is that the cycle for these meme coins is getting smaller and smaller and smaller and smaller. And that's a concern because it's not just liquidity that's getting spread out, but it's also the attention of the consumers. Previously, I would look at a coin on Pump Fund and I would decide whether or not I'd like to allocate some capital into it, and it would tend to play out within a matter of weeks to months. Now, if I were to invest in a Pump Fund coin and it doesn't start performing extremely well within a matter of days, sometimes even hours, it tends to just get rugged or it just bleeds to death. And so all of the liquidity gets extracted there. This has basically been happening across all Pump Fund tokens at this point, and the cycles are getting smaller and smaller and smaller. All while Bitcoin dominance continues to grow higher and the rest of the altcoin market continues to bleed because it's not attracting enough attention from retail. And as we can see, Bitcoin dominance just continues to rip, setting that new cycle high around 64.4%. If we zoom out again, this is what altcoin season looks like, where Bitcoin dominance just crashes for a matter of weeks to a matter of a couple months. Now, here's the scary part when it comes to Bitcoin dominance. If I show you this chart, you would not believe it. This is the 58 to 71% range that was drawn as far back as October 2023. What we need to understand here is that there actually is a solid possibility that Bitcoin dominance could rip much higher if we are to evaluate this range. As we can see in 2023, we hit 71%, came back down to retest the bottom of the range, and then exploded to the upside, making a new high above 72%. Before we ended up getting a mini altcoin season. Now Bitcoin dominance has continued to skyrocket and it doesn't really look like it's slowing down, and it has reclaimed this range right around the 58% level, suggesting that it could potentially move higher. So how am I navigating this? As usual, a Bitcoin heavy portfolio is the way to go. So for now, I have most of my capital allocated into Bitcoin, and I have consolidated a lot of my altcoin holdings until we get a confirmed Bitcoin dominance downtrend. Now, when do I think that this downtrend will actually occur? That would be around the time that quantitative tightening ends, and hopefully that happens at the next meeting on March 18th. And another thing that links to this is, of course, the chart that I've been showing you over and over again, evaluating ETH against Bitcoin, but also putting in monetary policy and comparing the performance. A lot of you on the channel have already seen this chart, but as I got new subscribers, I'll show it again quickly. Basically, when we're in quantitative tightening, ETH bleeds against Bitcoin. When we're in quantitative easing, ETH outperforms Bitcoin. And now, as we can see here, we are still in quantitative tightening. Quantitative tightening is represented by this upper line, which is essentially the Fed's balance sheet. I think this will turn around, and now ETH Bitcoin is at a crucial range. I always look at Ethereum to determine how the rest of the altcoin market will outperform on a bigger scale, not just the Solana shitcoins that have been launching on PumpFun. Because as Ethereum shows strength, so will the rest of the altcoin market, in my honest opinion. So currently, as I said, Bitcoin heavy, started dollar cost averaging into Ethereum with some of my Bitcoin holdings because this is a relatively attractive level. Although since we are still in quantitative tightening, no one can really tell you if we can still go lower, but it's impossible to time the bottom on these things. All I know is that within 2025, Ethereum should massively outperform Bitcoin. Just a reminder here, last cycle we went all the way up to basically 0.09, and Ethereum against Bitcoin is below 0.03. That leaves a lot of room for gains if you are to start accumulating Ethereum at these levels, as I've been doing on weeks. So basically, in the meantime, what I'm looking to do to make profits during these difficult market conditions is to not over allocate into altcoins, but rather trade this Bitcoin price action because it's been extremely profitable. As I've said, I think that we're going to be bouncing around this range for a while, and it's been a relatively safe strategy when we're in the previous range to essentially long the bottom of the range and short the top of the range. Now, sometimes it's not as easy as that, and obviously we'll be looking at some key levels within the range, like the 100K level that I've alluded to earlier, but naturally this is how I plan to make a lot of profits in the coming weeks if Bitcoin is to stay within this range and if altcoins are continuing to bleed. If you want to take part in any of the trades that I discuss on this channel, make sure to click the first link in my description. It brings you directly to Weeks, and with my link you can get a $20,000 bonus, and you also get 50% off all of your trading fees. And also, if you want to enter any of the trades that we make with the community on a live daily basis, make sure to join our Discord. It's the second link in my description. You get unlimited crypto alpha, and you also get some world-class trading setups with proper risk management so you don't lose your money. And I know it's important to highlight performance, but as we can see within this community, we have lots of gainers, people making over 150% in one trade, in several trades actually, 368%. And actually just recently, if I go into one of our chats, we can see that one of our legends over here made nearly a 400% gain by shorting Bitcoin right below the 99K level. And as we can see now, if he's still in this trade, he's likely in some even more significant profits as Bitcoin looks to move a little bit lower. So if you want any of the kind of trade setups that I've been doing and that the community has been doing, make sure to click the second link in my description. But I would always recommend that you sign up with the first one to Weeks because it's the same exchange that I use, and so you can track those trades quite accurately. And to wrap up the video, it's time to announce the winner of the giveaways. So at the time of posting that giveaway, we had 3 valid signups on Weeks, which were one of the conditions to enter the giveaway. So here we have the 3 user IDs, and these are the last 4 digits of the user IDs to be able to win $100 worth of Bitcoin. Let's see the results. And there we have it. If your user ID on Weeks ends in 4594, make sure to comment on this video down below, and I will be sending you $100 worth of Bitcoin directly to your account. Make sure to comment down below so we can connect. And that sums up today's video. We've seen that the launch of PumpFun has stolen liquidity from the rest of the altcoin market. But that's not the only reason why altcoins are severely underperforming, and that's to do with monetary policy. As we are still in quantitative tightening, it's likely that this will continue until the Fed pivots. In the meantime, it's been relatively profitable to keep stacking Bitcoin and trading it within this range until looser monetary policy comes around. And based on what we saw for the Bitcoin dominance chart, I think that Bitcoin dominance will continue to move on higher as altcoins continue to bleed. And yes, that's whether Bitcoin goes up above towards the range highs or down below retesting the 90K level. We need Ethereum to bottom against its Bitcoin pair, and the only time that really happens, as we've seen historically, is when quantitative tightening ends. So we're waiting for that change in monetary policy, and in the meantime, just trading the price action. If you enjoyed the content, make sure to smash that like button and subscribe. I'll see you in tomorrow's video.